Thank you very much, Bob, for the very nice introduction. And it is a great honor and pleasure to be here. And above all, thank you very much for inviting me. I'm in charge of corporate social responsibility at a company called Tokio Marine Holdings. Now, the name of the company doesn't tell much. As a matter of fact, there used to be a swimming pool facility in the heart of Tokyo that with the same name. Unfortunately, that facility went out of business a long time ago. So we are the only surviving Tokio Marine. The reason why we have the name Marine is we started as a marine and cargo insurer back in 1879, so we're a little bit younger than John Hancock. And then we gradually expanded our business into the what you now call property and casualty. And currently, the business line that we write is automobile insurance. But you're not seeing automobile policies here in the U.S. because we don't write any here. It's not just that we don't like your market, but there's just more skilled insurers who are adapted here. In terms of life insurance, we started writing life insurance back in '96, and that's when the Japanese market was deregulated. Before that, non-life insurance companies could not write any life insurance policies. So there was a big change there. And here in the United States, we have expanded our business portfolio pretty much over the past decade. And now we're proud to say that we have a local representative here, Philadelphia Insurance Group. I wondered if there's anybody from Philadelphia Insurance attending this meeting. No, unfortunately. But to their defense, they're more on B2B business, and they don't regularly interact with the individuals. But in any event, I had the privilege of speaking at the World Economic Forum's first symposium on cognitive decline, which was hosted by Keio University in October 2015. And we had a very exciting discussion there about how financial institutions and insurance can better serve the interests of aging economy. As we heard yesterday from Dr. Seike, Japan is the fastest aging economy on the globe. And financial service providers are working really hard to adapt to the change. I think I'd better give you a quick outlook on how aging and dementia is becoming serious in Japan. I won't go in details, but here are some of the estimations that show Japan being ahead of the curve when it comes to aging. By 2025, a third of the population will become 75 years or older. The number of dementia patients will rise accordingly from 2.8 million in 2013 to 4.7 million in 2025. The trend will drive the cost of long-term care, which is currently at 82 billion US dollars, to 182 billion in 2025. And it therefore has a significant impact on the national social security budget, which is an annoying element in the national budget, which is actually in deep red at the current moment. Now, before I jump into the private sector's efforts, I think I need to touch a little bit about how our public local term care insurance system is functioning. It is the primary coverage for the risk of dementia and insured by municipalities. Private sector insurance companies such as us, Tokio Marine, are not involved as a risk carrier in this program. I think it is fair to state, that the long-term care insurance has functioned as a solid component of the social security system to support elderly population, along with pension and medical care insurance. It is meant to cover all population who are eligible in terms of age, and the number of beneficiaries of long-term care services has almost tripled from 1.5 million in year 2000 to 4.5 million in 2012. It is worth noting that the system offers coverage for preventative purpose to people who are yet to be designated as long-term care required. And I think this is a feature which is not found in many countries. The system is not without challenges, though. There's a concern for the increasing trend in the insurer's copay amount. As we saw back in August last year, when the insurer's copay was increased from 10% to 20% for relatively wealthy cohort. It is in part the government's effort to balance the national fiscal budget. But you may also note that the government is starting to place bigger emphasis on the importance of community-based, community-level caregiving. As is the case in many other countries, the family size is becoming smaller, and with only 2 generations living together, which means there are a smaller number of family members who can support the elderly generation. So the government is aware of the change, and that is why they are pressing hard on local communities to establish a caring environment on their own. Since Tokio Marine is relatively new in the life insurance sector, we have no interest in competing against traditional giants in the life sector. We rather picture ourselves as a versatile player with innovative products. I couldn't agree more to what Jason said yesterday. Changing the language to assist financial well-being through wealth care. Let me draw from an insurance policy that was designed by our sibling company, Tokio Marine Life, with an aim to materialize the wealth care approach. This is a product which was launched 6 years ago. It is based on a whole life policy with death benefit, but it pays a fixed amount in case the policyholder becomes long-term care required. You may not be accustomed to this kind of chart, so I'll go through real quickly, but in this model, the policyholder signs a contract at the age of 30 and starts paying monthly premium over the course of 30 years. As soon as the policy becomes effective, the policyholder is covered for death, disability, and long-term benefit. And the cover continues even after he or she has completed the payment. The green-colored portion represents a surrender value. In other words, the amount of money you are entitled to receive in case you cancel the policy. Besides those basics, the policy has 3 notable characteristics. Firstly, the insured has a choice to receive the long-term care benefit in either lump sum or in the form of annuity over 10 years. Secondly, the insured has a choice to predetermine a designated proxy who will assume the right to claim insurance benefit on the insured's behalf. Lastly, and as the fun part of the program, if the insured stays healthy up to a certain age, he or she receives congratulatory money up to 3 times. In this model, the beneficiary receives around 250,000 yen, which is approximately 2 grand in US dollars, each at ages 70 and 75, and around 8 grand at the age of 80. Now, it's not a big money, but it's just a sense of reward that we're trying to give. And I think this is a similar approach to what Mike mentioned as a behavioral science. So the idea behind designing this product was to reward people who care for themselves and contribute to promoting healthier lifestyle, while offering undisrupted financial support in case the policyholder has become subject to long-term care. Now, while insurance policies are our key product, more can be expected from insurance companies. In an effort to produce quality caregiving to its customers in need, the group has been running its in-home nursing care services from the late 80s long before the launch of the public long-term care system. The group is capable of offering nursing care management to serve the long-term care insurance system and dementia care mapping from its long-term care facilities, while providing awareness-raising opportunities within the group company employees as well as to the public. By retaining nursing care expertise within the group, it helps the insurance operation learn from caregiving practices and feed the knowledge into insurance product development. For the entire Tokio Marine Group to better serve the aging society, each employee is expected to become more sensitive to the issue and to be equipped with the ability to offer first-hand assistance to people with dementia. My unit came to know about Dementia Supporters, which had been developed by an NGO and later recognized by the government, and started encouraging our workplace across the group's domestic business units to exercise it. I am very proud to mention that over 4,000 Tokio Marine Group company employees have become Dementia Supporters by the end of March of this year. As I touched earlier, we recognize the ongoing national efforts to establish a community-centered care system. The non-life business operation of Tokio Marine initiated a trial to encourage its agency network to participate in the municipal efforts to harness local network of caring. Since our origin is property and casualty, most of our insurance policies renew every year. And this means our agents go out to see their clients at least once every year at times of renewal. It gives an opportunity for the agents to check their clients' condition on both health and wealth. And from here, we think that insurance agents have a potential to play a bigger role in identifying early symptoms of dementia with their clients. Many point out the importance of early intervention in slowing the progression of dementia. However, there are limited social mechanisms to enable such early detection and intervention. This is where insurance agents have a potential role to play. And although it may require much of coordination efforts, it is possible that they detect a symptom of dementia from their customers. The information thus collected should then be shared with the caregiving coordinator within the local community to help respond proactively. And what is more, in many cases, insurance agents are deeply rooted in their local community and are capable of taking a leadership role in community activities to drive concerted efforts against dementia. So I think that is pretty much what I have to say. Thank you very much for listening.